Hello and welcome. In this video, we will know who the hidden players of stock market are. Okay? We have learnt about small players and big players. Now it is about hidden players. Now these hidden players are not directly involved with stock market, but they affect the movement of the stock market. Okay. Now, there are three main hidden players. One is news channels, second is brokerages, and third is rating agencies. Okay. Now, news channels. What do they do? There are news channels which are dedicated to stock market, in the sense dedicated to finance or finance. Now, these news channels invite analysts or panelists who are so called experts in the field of investment or stock market. Now, they come to the news channels to a show and they give their opinion about a stock or about a sector. And we people who watch these news channels buy and sell the stocks according to their suggestions. And when we do that, the price of the stock moves. Now, these panelists or analysts, how can we trust them? How can we say they are not biased? We are not saying they are biased, they may not be biased. But how can we be so sure? How can we trust that the suggestion they are giving is in our interest? Correct? They might have been paid by someone else, or they may have their own interest in recommending some stocks. Now, this suggestion also happens on social media too. Okay, for example, there are many channels on YouTube which give recommendation of stocks. They say that buy this stock, this will move up in this many days and you can sell them. But then, how can we trust them? How can we know their hidden motives? We cannot, correct? So, whenever you watch a news channel or anything on social media, do your own analysis before buying. Because if you are a new investor in stock market and if you take their suggestion and just go out and buy the stocks, hoping the price will go according to their suggestion, but ultimately failing. Okay, so be cautious about this. Second is brokerages. Now, brokerages earn their money when we investors or traders trade in their account. Correct? When we buy shares or sell shares or buy options, sell options, buy futures, sell options, they get brokerage. So, if I'm an investor and if I buy some stocks now and then do nothing for 2 years, 3 years, then the brokerage will not be, or brokerage firm will not be earning anything from my account. Correct? They need to earn, and for earning, we need to trade. We need to trade as many times as possible, and to do that, they give tips and suggestions too. They also recommend you stock. They call you and they tell you this stock is good right now, it is at its lowest point and it is better to buy them. And when you go according to their suggestion, when you perform the buying action, they earn the brokerage. And after some time, they'll call you and say that this is at its highest point and it is better to sell it off. And when you sell them, it gives them money, or they earn from brokerage. So brokerages earn when we trade, and they want the price of the stock market to move up and down too. Okay. So once again, be cautious about the recommendations that you get from brokerages. The third main hidden player who affect the market a lot are rating agencies. Okay. Now these are the famous rating agencies of India. There are other rating agencies belonging to other countries too, which are not listed out. What these rating agencies do is they analyze the company and they give ratings. Okay, they have experts in their agencies who analyze the company, their profit, their loss, their debt, their ratios, their investments, their future plans, everything else, and give a rating to the company. And they give a rating like junk or default, highest risk, high risk, moderate risk, low risk, outperformer, and so on. And according to the ratings that these agencies give, the price of the stock moves up and down. It is because when an agency gives a junk rating to a company, then investors who have invested in that particular company will start removing their money out. And when they do that, the market price suddenly falls down. And when a company gives low risk rating to a company, then everyone will start investing in that company and the price of that particular company goes up. Okay, for example, let us say Credit Rating Information Services of India, CRISIL, has given a low risk rating for a company X. Okay, so everyone invests in this company, or everyone buys the stock of company X because this has given a low risk rating for this company. Some time passes by, and one day another rating agency this says that the same company X has moderate risk, or it says the rating has been downgraded from low risk to moderate risk, meaning the investment or the company, the money that you put in the company is at moderate risk. Okay, you can assume it like that. So what happens? This creates a panic in the investor. So what do the investors do? They start taking out money from the company. Taking out money meaning selling the shares. So they start selling the shares of company X. And when they do that in large volume, then the price, market price of company X comes down. Okay. Now, this is also a rating company, this is also a rating company. The ratings given by this company and this company can vary. Just like how you are different than me, how your analysis is different than mine. The rating given by this and this will vary. It depends on the analysis that the so-called expert does. Okay, and so it generally varies. And when it varies, and when one company downgrades or upgrades, we see a huge movement in the market price. Okay, opposite also goes true. Let us say that Credit or Care has or had rated company X as moderate risk. So everyone had removed their money from it. But then one fine day, this rating agency company says that the rating of company X has been upgraded to low risk. So it was moderate risk by this, it is low risk by this. So everyone starts buying the shares of company X, and so the market price moves up. And this is what you hear people saying: the market is down today, the market is up today. Well, it is not the entire market, it is only the price of that particular company. Okay, so rating agencies play a very vital role in the movement of stock price. Okay, recently Hindenburg had submitted a report on Adani Group saying that they find the Adani companies not so good, due to which millions and millions of rupees was lost. Okay, investors lost millions and millions of rupees, and the stock price went down drastically. Okay, so this is how rating agencies can affect the price of stock. They are not involved in the stock market directly, but they can affect the price of stock. All right? Yes. So I hope you have understood the topic. I'll see you in the next video. Till then, take care and thank you for watching.